Good morning and welcome. You're tuned into Market Cafe. You're on ET now with me, Lisa Fernandez, and I also have Snehi Shah. So, this is the show where during the course of the next 1 hour, we take you through what's trending both on the international as well as the domestic front. Well, on the domestic front, which is on the latter part of the show, we will take you through stocks that may advance and decline on the back of news, announcements, and many more. But first, let's kickstart the show with what's coming in from the international market. And Snehi has curated the data for us. Snehi, what's the scene like? Is it favoring our Indian market?
Absolutely, Lisa. Everywhere you see US, you see Europe. It's a sea of green. So, lots of positivity when we look at the global markets. Let me take you through what each market has done. And let's start with the US markets then. US stock futures were flat on Monday night as the third quarter earnings season gains momentum. However, the major averages have all closed in the green during Monday's main trading session. You're seeing stellar gains coming from Wall Street. Dow is just shy of a 1% uptick. S&P 500 was up 1% and Nasdaq is the one that's outperformed its peers, up 1.2% intraday. Now, although treasury yields climbed higher, which typically puts downward pressure on equities, stocks posted gains as investors became optimistic about corporate earnings. The 10-year US treasury yield rose 7 bips to 4.7% on Monday. Nonetheless, the yield on the 10-year treasury is still more than 10 bips lower than its 16-year highs from earlier in the month. Some respite coming there as well. Small caps were the winners in yesterday's trading session on Wall Street. They rallied 1.6%. Now, a total of 53 companies in the S&P 500, which make up about 11% of the index, are scheduled to report their results this week. 5 names in the Dow will also be releasing their results, and key reports on Tuesday include Johnson & Johnson, Bank of America, Goldman Sachs, as well as Lockheed Martin. Big companies, big numbers to watch out for. And in addition to Tuesday's earnings report, Wall Street will also be keeping an eye out for fresh economic data. Retail sales and industrial production data for September will be released before the bell. October's housing market index and business leaders survey numbers are also scheduled to be announced on Tuesday morning. So, that's what a handover from the US is looking like, largely positive. Let's shift focus to Europe then, and European markets have also closed higher on Monday. The Pan-European Stock 600 index is up 0.2% with most sectors and major bosses in the positive territory. Retail stocks were the winners when it comes to European markets. They rallied 2% to lead gains. FTSE also up 0.4%, DAX up 0.3%. So, positivity when it comes to the US as well as the European markets, Lisa. Let's see how this, pans out for our markets this morning. Do we see a sea of green on Dalal Street as well? Let's see.
Right, but now let's look at what other commodities are doing.
Absolutely.
The prices of crude last week, it spiraled upwards. But now, and it was mainly on the concerns of the oil disruption, the Israel-Hamas war that may, spill over to the other Middle East region as well. But now those concerns are put to rest as of now because investors are of the view that it won't spill over to other regions. So yes, there might be a good supply of oil and that has eased the oil prices. If I look at the prices now, Brent crude oil, that's below $90 per barrel. It's at 89.76, and WTI crude prices that's at around $86.6 per barrel. There's another reason why the reason behind the easing of crude oil prices, and that is because there are reports suggesting that US could potentially ease its sanction on Venezuelans oil industry. Venezuela's government as well as the opposition, they plan to resume their long suspended talks today, and so on the back of stability coming in from the Venezuela government, US is planning to ease off the sanctions. So any US action is only expected after President Nicolas Maduro, he commits to a presidential election date. So what will this impact be on the tight crude supply that we are seeing? Any relaxation of the sanctions that could ease up Venezuela's energy sector, oil exports from the country. So yes, it's a positive for the oil prices. And if I look at gold prices also, it has slipped, but it's still holding about that $1,900 per ounce level. So that's Snehi, largely on the crude as well as other commodity check.
Absolutely, Lisa. With that also, let's take stock of all the important cues that you need to be keeping on your radar for this Tuesday morning. And when we look at global cues coming in, you've got a bunch of data coming in, and from the US, you've got industrial production as well as retail sales. UK, you've got unemployment data as well as jobless claims coming in, so watch out for this data. Shifting focus back home then, when it comes to Nifty 50 earnings, you've got Bajaj Finance that will be reporting its Q2 numbers today, so keep an eye out on this stock as well. And when it comes to corporate action, then Maruti Suzuki will be in focus because its board will mull equity issue to parent Suzuki for their Gujarat unit. So this is another stock that will be in focus today, so keep an eye out for all of these cues.
Well, and let's bring you the latest on the war front. According to the Palestinian news agencies, more than 2,800 Palestinian lives have been claimed due to Israeli attacks. Hamas militant groups admits to 250 captives being held in Gaza. Meanwhile, on the resources front, the World Health Organization warns that only 24 hours of water, electricity and fuel is left in the besieged Gaza Strip on Israeli bombardment that continues to claim hundreds of lives. Israel has in fact deployed troops, tanks and weaponry along this border fence with Gaza amidst the expectations that it will soon begin a ground invasion.
Well, and let's keep it with the West Asian tensions then. US President Joe Biden is all set to visit war-torn Israel on Wednesday to express solidarity. A meeting in person would allow Biden to privately discuss concerns and possible red lines in the looming Israeli ground invasion of Gaza. Meanwhile, the Israeli defense minister has warned that the ongoing war will be a long one with a high price to bear. Speaking after a meeting with the US Secretary of State Antony Blinken, he described the US as a great ally. Following his visit to Israel, Biden will also travel to Jordan to meet the king and the Egyptian president to discuss civilian Gaza's humanitarian needs.
And Microsoft's Linkedln eliminated as many as 668 jobs across teams in what was the second round of job cuts this year for the social media network for professionals. The cuts will impact 3% of their total workforce, and it's not only LinkedIn because reports are also suggesting that Rolls-Royce is set to access many as 2,500 roles as part of a cost-cutting drive. The job cuts will be distributed across the engine maker's global operation and is likely to impact the UK staff.
Well, and pain for China's property sector continues to mount. Country Garden's entire offshore debt will be deemed to be in default if the developer fails to make that 15 million coupon payment. Lack of payment, which is expected after the company warned about its inability to meet offshore debt obligations, would make the firm the latest in scores of Chinese developers who have defaulted.
So that was the highlight on the global stories. But with that, let's slip into a short break. And after the break, we'll mark the Asian markets. So stay tuned on the show.
Hi there, welcome back. This is Market Cafe and you're watching ET Now. Let's also take stock of other major Asian indices and let's take a look at what Hang Seng is doing in trade. Well, we did say that there was positivity all across the screen when it comes to Asia. Hang Seng is also holding on to those gains. 0.7% of an uptick is what you're seeing in when it comes to Hang Seng. Shifting focus then, let's also quickly mark what Shanghai has been up to. Shanghai is the one that has nominally just right now slipped into the red, down 0.2% is what Shanghai is doing. Absolutely flat moves when it comes to the Shanghai, but well, it's the only index that has just right now slipped into the red nominally. Moving on, let's also take a look at what Nikkei is doing, and Nikkei is the one that's bucking the trend. It's leading the gains when it comes to the Asian markets, up 1.1%, it's seeing a 355 point move upwards. Nikkei big gainer in Asian markets this morning. Largely, let's also mark what Kospi is up to, that's South Korea's index. And well, Kospi was up 0.8% when it opened in the morning, continues to hold on to those levels, up 0.7% as we speak. So, well, this is what largely all the Asian markets are doing as of now.
Well, thank you for that, Snehi. Also, let's look at what are the market voices and corporate voices that we will have on our channel today. Starting at 9:20 a.m., Aman Chauhan from Abacus Asset Manager will be talking about the market outlook going forward. At 9:30 a.m., Arnab Banerjee, the MD and CEO of CEAT, will talk about the earnings and growth outlook for the company post their Q2 earnings. And at 9:40 a.m., Vinay Dubey, the CEO of Akasa Air, will be talking about the flight path ahead for the airline. At 10 a.m., Suneet P. Bhatt, the managing director of Ceylon Exploration Technology, it's in earnings with ET Now, will be talking about the growth outlook for the company. And at 10:20 a.m., Anil Malani, the CFO of Delta Corporation, also will be sharing the outlook for the company post the Q2 earnings. So that's the stellar pipeline that we have on our show lined up today.
Well, absolutely lots of important market voices and managements, and especially when we have the management of Akasa Air coming in after the recent turmoil that the airline has seen. So I'll stay tuned to the channel the entire day. Let's move on then, and the Indian rupee has hit a one-year low, falling to 83.28 against the US dollar. Investors are on edge amid escalating worries over oil prices and growing concerns about the Middle East conflict potentially involving more countries. The Reserve Bank of India is actively intervening to stabilize the currency. We managed to speak to Gaurang Somaya from MOFSL. Let's listen into his views on this development.
Rupee in the last few months, actually, it's just stabilizing around these levels of 83. And definitely it has been on the depreciation trajectory in the past few sessions because of the geopolitical tensions that have been going on. But at the same time, if you see, the central bank has been very actively intervening and curtailing the volatility of the currency. And we are expecting that this intervention is likely to continue. The central bank has kind of used up some of its reserves in the past few months, and that again is helping the rupee stabilize despite the strength in the dollar index. We have seen this geopolitical tensions also escalating, but rupee as such has been a little resilient and is just hovering around these levels of close to 83.25, 83 kind of levels in the past few weeks.
Well, and some good news pouring in for consumers because the wholesale price index inflation that showed a notable improvement and that has eased to a negative 0.26% in September from a negative 0.52% in the previous month, and this marks the sixth consecutive month in the deflationary zone. The decline is attributed to reduced prices in key sectors like the chemical products, mineral oils, textiles, basic metals, as well as food.
Well, in the first major banking numbers for the second quarter, HDFC Bank has handed in a steady set of earnings. Remember, this was the first round of earnings for the bank after its merger with HDFC Limited. NII is a slight miss, PAT has come above and asset quality has improved. And my colleague Harsh Saita is joining in with the earnings roundup. Harsh, this is a sector that you tracked very closely. Please break down the numbers for us.
Yes, so the net interest income has come in at that 27,385 crore mark. We expected that number at around 28,500 crore. So that's come in a tad lower than expected. And really, in a sense, the impact has been due to, it has in a sense been impacted by margins. Your margins have actually come in at 3.65% versus the 3.7% which the street was building in. This is partly due to the fact that you are seeing, of course, the ICRR impact which has come on HDFC Bank's book, as well as the excess liquidity which HDFC Bank holds, which is what the management really elaborated upon in the con call as well. Let's also look at where operating profit stands. That stands at around 22,695 crore, so around 22,700 crore is where that number is at, versus the 23,000 crore number. Not too bad versus our expectations, largely in line. Provisions came in lower and the effective tax rate was far lower, which meant that your profit after tax came in at a shade below 16,000 crore. The expected number was at around that 14,800 crore. Your gross NPA ratio has come off by around 7 bips or so. Your net NPA ratio also has come down. So both of those are positives. And these ratios are basis the provisional numbers which HDFC Bank disclosed in middle of September. Of course, with regard to the commentary itself, there is going to be no fundraise. That is one positive that came through from the commentary. NIM, there could be a bit of a recovery because there was quite an impact due to the ICRR as well. So going forward, there could be that reversal which will come through going forward. Also, the excess liquidity through the next financial year will wane, or rather through the current financial year will start reducing, which will aid margins as well going forward. No real guidance on margins given, but nonetheless, it looks like as if the margins are set to recover and they seem to have bottomed. That seems to be the commentary coming out of HDFC Bank.
Well, thank you, Harsh, for taking us through the numbers of HDFC Bank. It reported their earnings post-marketer, so HDFC Bank will be in focus today. Asset quality has seen an improvement. PAT is above estimates. But Mr. Srinivasan Vaidyanathan, who is the Chief Financial Officer of HDFC Bank, spoke about their Q2 earnings. So listen in.
See, that is the fine balance, right? We are here for growth, and the market provides enormous opportunity for growth, right? And it's one of the fastest growing economies in the world, and where the consumer credit penetration is in the low 20s. So there is a big runway for growth that we are tapping into. So yes, we are working towards growing, and at the same time in a profitable and a optimized margin, and for which ideally we will get to fund that through the deposit, and that is a journey, right? That is how we have done, and this merger has brought in borrowings, debt borrowings, as a one-time merger adjustment that has come in to us, and then over a period of time that we will work through this to see how to replace it. So it is a journey, and it is not one. There are several positives that come with the merger, and we try to work through to say how we build further from a customer relationship and broad-base that growth.
All right, that's the word coming in from the CFO of HDFC Bank on their Q2 numbers. But let's also go across to Ashesha, who's standing by with what the brokerages are saying on HDFC Bank after the bank has released their numbers. Ashesha, take it away.
Well, yes, first up, HSBC, which has maintained its buy stance on the stock, but they've cut their target price from the earlier target price of 1930. They've cut it to 1850. They say that there are a few low-hanging fruits to pluck, and perhaps the outlook looks challenging from here on. Consistent execution can pull it through. Risk to reward looks favorable as of now, but improving net interest margin and narrowing of performance gap versus ICICI Bank is crucial. So for now, HSBC has maintained its buy stance, and they've cut their target price to 1850. Meanwhile, Morgan Stanley has maintained its overweight stance. 2,110 rupees is their target price. They say 12% PAT beat, margin gain are the next key deliverable for the bank from here on. Core operating profit was in line with what the street was working with. They expect NII growth to re-accelerate from here on in the second half of the year, and they continue to expect EPS growth of about 17 to 18% on a year-on-year basis after year one. Meanwhile, Jefferies has also maintained its buy. They've maintained their target price at 2030. Jefferies says that higher liquidity buffers has dragged margins for the bank in the quarter gone by, but they are expected to improve from the fourth quarter of FY24. Deposit mobilization was stronger, loan growth was slow but can improve from here on, and they're well provided for their potential stressed assets. So they're maintaining their buy, and 2030 is the target that they've given on HDFC Bank. Meanwhile, InCred has upgraded the stock to add from their earlier hold rating, but they've maintained their target price at 2,000. InCred says that margin compression amid higher liquidity and normalization was seen in the quarter gone by. Granularity in the growth in advances is encouraging in the quarter gone by, but they believe that the worst is behind us. This is the only brokerage house which has upgraded the stock to add from hold, but they've maintained the target price of 2,000 on HDFC Bank.
Well, thank you, Ashesha, for sharing the brokerage reports on HDFC Bank that has reported its first earnings after its merger. And most of the brokerages have given a buy. They have maintained a buy rating on that stock. But with that, let's slip into. Before that, let's see on Akasa. It's after a brief turbulence over the Mars pilot exits. Akasa Air has finally managed to resolve the crisis and they are looking to end the financial year at a 30% growth. Now talking exclusively to ET Now and ET Now Swadesh managing editor Nikunj Dalmia, Akasa Air top boss Vinay Dubey has laid out a clear strategy for the private airline. And while we'll have the full chat for you at 9:40 a.m., listen in to an excerpt of this conversation where he sheds light on the airfares, competition as well as the future of the aviation sector.
Exiting this financial year, there's almost a 30% growth, and that growth is reflective of two factors. One is our planning and training related to pilots, and the other one is the delivery of aircraft. Really what happened in the July-August timeframe is we had a small number of pilots that decided to leave, which ordinarily we're all for free trade, it's not an issue, but aviation is an essential service. If you remember back to the days when we were all holed up in COVID, you had fire, police, ambulance, those kinds of things, and airlines that were actually allowed to leave their societies. So we're a recognized essential service. And so when people leave without even 24 hours notice, it puts the consumers in an extremely bad position, and we were forced to take cancellations. And that's really what went wrong. Now, what we have done since then is we've been able to stabilize our network. We've reduced our flight just to make sure that we offer consumers once again a very reliable, dependable service by the regulator that pilots have to serve their notice period. So we're not looking at any more resignations for us or anybody else in the industry with 24 hours notice. Now it's a minimum of 6 months notice. So that's just to give everyone a sense that stability is here to stay for the entire industry. In terms of long-term growth in pilots, let me give you, just some statistics to give you a sense of, the fact that this is not an insurmountable challenge. In fact, it's a challenge that we can resolve very easily.
Why is the airline sector, both locally and globally, is a tough sector to be in? It's called as a gruesome sector according to Buffett. It's called a tough sector according to Rakesh Jhunjhunwala. But the sector where you got more failures rather than success stories. Why is that?
So the nascency of the entire global industry is part of the issue. So the first market to be deregulated was the US, and that happened only in 1982. So just how old the industry is and the settling that takes place is really largely to blame for what you've seen historically. But let me give you another example of why I think the future is very different. Would you be surprised if I would tell you that there were probably 6 or 7 airlines in the US that made money for 10 consecutive years between 2010 and 2019?
Just before COVID.
10 consecutive years, a decade of profitability, with my former employer making, profitability starting with a B, billions, right? And that gives you a sense that once the industry matures, it's an industry that can make a lot of money.
Who has the pricing power in the Indian airline sector, the airline or the consumer?
If you look at what a ticket costs in India for a 1,000-kilometer journey, and you compare it to what a ticket costs in the United States, North America, and Europe, I think you'll see some of the best fares. So I think the consumers are extremely well off in India. And I think the airlines are starting to be well off. I keep going back to this golden decade, but I think you're going to see a lot of profitability for the next 10 years with airlines as well.
Fine, that's the word coming in from the CEO of Akasa Air. We'll bring you the full chat at 9:40 today, so stay tuned. Now, Jio Financial has posted healthy sets of results in the second quarter. Profit has doubled to 668 crore from 332 crore last quarter. Meanwhile, revenue has also jumped almost 47% to 608 crore for the quarter ended September 30th. Samit is joining in to break down these numbers for us and the highlights of Jio Financials. Good morning, Samit. Take it away.
Well, Jio Financial did come out with its Q2 numbers, but if you see, the Q2 numbers are largely irrelevant given the fact that the company is yet to start its real business. But what is more important from the Jio Financial is the presentation that has come in post earnings, where the company is saying that they're approaching or they're adopting a direct to customer approach which will drive cost efficiencies for the company going forward. Along with this, they're also saying that they're looking to develop a unified app for diverse financial assets for customers, and this is very much similar to many many other financial players in the industry. Now, so far what the company has launched is they have launched a personal loan for salaried and self-employed individuals, but this has been started and via the My Jio app and has only started in the Mumbai region currently. They have also started consumer durable loans and only in 300 stores so far. Now, do remember that Reliance Retail has more than 18,000 stores. So this is just a pilot launch that the company has done when it comes to consumer durable loans. Also, it's too premature to compare it with Bajaj Finance. Given the size of Bajaj Finance, it has more than 1.5 lakh point of sales and nearly 1.39 lakh EMI card point of sales currently. So it's too premature to compare with Bajaj Finance, but its direct competition here will be Bajaj Finance going forward. Now, the company also said that they have established partnership with nearly 24 insurance companies across life, health and general insurance. Now, this when launched will be a direct competition to PB Fintech, that is Policy Bazaar. They have also successfully launched or relaunched the saving account and bill payments and launched the Soundbox, which is still in pilot stage. Now, Paytm also has its Soundbox, so there will be some competition with Paytm on this front as well. Now, what is in works going forward? They are also looking to launch business and merchant loans for self-employed individuals, sole proprietors and for small business entities. They are also looking to launch auto loans, home loans and loan against shares as well going forward. Now, they also plan to launch debit cards going ahead. This is what the company has given as a strategy of going ahead, that what they plan to launch going forward. Now, given the fact that the financial details were out, we also could have an idea on the company's valuations. Now, if you see, the company's core value for Jio Financial stands at close to 65,500 crore. This is the market capitalization of Jio Financial less its value in Reliance Industries, and the adjusted net worth for Jio Financial stands at close to 21,000 crore rupees, which means that Jio Financial is currently trading at 3.1 times its price to book, which is not that expensive when compared to other NBFC players in the industry.
Well, thank you so much for breaking down the numbers of Jio Financial. It has reported their first quarterly earnings after listing. So Jio Financial will be in focus. But stay with us because you track the oil and gas sector, and Singapore's GRMs, they have dropped to $4 per barrels, and it is at its lowest since July 7. So it will impact stocks like MRPL, BPCL and HPCL. So what's the impact on these stocks, Amit?
Well, all the oil refiners would remain in focus, that is MRPL, Chennai Petroleum, Indian Oil Corporation, BPCL, HPCL and Reliance Industries. And this is because of the fact that Singapore gross refining margin, which is the Asian benchmark for GRMs, has fallen to around $4 per barrel. Now, the margins are lowest since July 7th. And if you see from the recent peak that we have seen on August 28th of close to $15.4 per barrel, the margins have fallen by nearly 74%. Now, this is because all product prices were down, and the drop in margins could be owing to higher Chinese exports of refined products, Russia easing the fuel export ban, and because of higher refined product inventory in the US market. Now, how does it impact the oil refiners? Now, generally a $1 per barrel drop in gross refining margin impacts MRPL annual EBITDA by around 1,000 odd crore rupees. For Chennai Petro, it lowers their EPS by around 30 odd %. For Indian Oil Corporation, BPCL, HPCL, it decreases their EPS by around 14 to 16%. And for Reliance Industries, their consolidated earnings come down by around 4 to 5% with every $1 per barrel drop in the gross refining margins.
Well, thank you for that, Somit. And with that, let's slip into a short break. More news and updates on the other side of the break, so stay tuned on the show.
Hi there, welcome back. Still logged into Market Cafe. This is ET Now. Now, I'm joined in the studio by my colleague Ashesha, and she is here to take you through a list of all the stocks that could be potential buzzers in today's trading session. So, Ashesha, good morning and take it away.
Hi, good morning. So let's start off with ICICI Securities. Very strong set of results for the quarter gone by. Revenues have seen an uptick. Margins have also expanded this quarter. Revenues, in fact, for the quarter gone by stood at 1,250 crores, which on a year-on-year basis is an uptick of about 46%. Margins have expanded to about 65% versus 61% same time last year. So on a year-on-year basis, margins have expanded by about 400 basis points. CAT over here as well, very strong set of numbers for the second quarter. Revenues are up 5.5%. Volumes rose on account of strong OEM demand for festive inventory. Margins have expanded to 15% versus 7% that the company had reported same time last year. So on a year-on-year basis, margins have also expanded by about 800 basis points. KEC International, on the back of some order win, where the company said that they've won orders worth about 1,315 crores. Som Distilleries, it was yesterday in focus on the back of its results, and today the company said that they've signed strategic contract manufacturing agreement in Jammu and Kashmir for manufacturing of IMFL delivery to canteen stores department. Remember, they've been already supplying to canteen store department to several parts of the country, and now this in addition has come to Jammu and Kashmir as well. Positive news flow, this counter will be in focus today. Cyan DLM, on the back of its results, largely in line set of numbers. Revenues have come in at 292 crores, which on a quarter-on-quarter basis is an uptick of about 34.5%. Margins have contracted, they've come in at 8.3% versus 9.2%. So sequentially it is a downtick of about 90 basis points. Jio Financial also reported its numbers largely in line. Delta Corp, remember the stock was in focus yesterday, it was down nearly 9 to 10%. Some block deals that took place yesterday. Bank of America Securities sold 30 lakh shares at the price of 128 rupees per share. Meanwhile, Society Generale also sold about 13.6 lakh shares at the price of 128.5. The stock will continue to be in focus today.
Well, thank you, Ashisha, for taking us through all those stocks that will be in focus today. So keep an eye on these stocks. But we have brokerages report coming in from Jefferies, Kotak, Axis, and they are on the stocks that have reported their earnings. And we have Vamakshi to take us through those. Good morning, Vamakshi. Take us through all those brokerage reports.
Well, yes, let me first start off with Dalmia Bharat. We have a note coming in from Jefferies, and the management in their call highlighted that the East region has seen price increase of almost 40 rupees to 50 rupees per bag so far, and in fact in the southern regions this hike is almost 30 rupees per bag. In the second quarter, the company did see some healthy cost savings for in terms of fuel as well as freight, but the incremental cost savings appear to be quite limited. Management is expecting that the recent volume underperformance that was seen, that is also expected to reverse. So keeping in mind all of these factors, Jefferies has actually maintained its buy rating but also gone ahead and upgraded their target price to 2,680 rupees per share. Moving on to Federal Bank, the company reported its numbers, and we have several brokerages coming out on this stock. We have Citi as well as Kotak maintaining a buy call on Federal Bank, and not just that, they've also gone ahead and hiked their target price from 160 rupees per share to 170 rupees per share. Lastly, let's also look at the commentary that has come in from brokerages. The net interest margin was flat, growth as well as the fees were encouraging. Asset quality metrics continue to show some stable trends, and that could actually result in negligible credit costs. There are a few positive surprises ahead as well that could result in an immediate re-rating. Now, as far as Kotak is concerned, Federal Bank is in fact one of its preferred pick among mid-tier banks. So largely we have Federal Bank in focus, positive rating coming in from most of the brokerages. Apart from that, lastly we will be focusing on Deepak Nitrite. We have a note coming in from Axis Capital, and they have highlighted that the import substitution led growth opportunity offers a very long runway for growth for Deepak Nitrite. They are reinvesting internal accruals in order to ramp up their specialties segment, and they also see nearly 19% EBITDA CAGR from FY23 to FY30, and they believe that the worst is largely over for this counter, and in fact they're expecting an earnings uptick to be one of the key trigger for the company's re-rating. So given all of these factors, Axis Cap has initiated coverage on Deepak Nitrite with a buy rating and a target price of 2,520 rupees per share.
Alright, keep an eye out for all of those stocks on the back of these brokerage notes coming in. But Vamakshi, let's also talk about the major earnings that we have on D Street today, and that is Bajaj Finance. Now that is expected to report another steady quarter, but from polls we are understanding that margins could come under pressure. So Vamakshi, what is the Street penciling in when it comes to Bajaj Finance?
Well, yes, but before that we'll also focus in on the result that came in from its housing finance subsidiary, that is Bajaj Housing Finance. Yes, we did see some strong loan growth of around 29% on a year-on-year basis. When we look at the net profit, however, that saw a decline on a sequential basis, and that was mainly on account of normalization of the tax rate. When we look at the NIMs, as you rightly pointed out, they did see a decline of almost 9 basis points sequentially and 12 basis points on a year-on-year basis, and that was mainly on account of higher borrowing cost. Not just that, when we look at the gross stage 3 ratio, that has marginally increased by almost 23 basis points as compared to the first quarter. Now moving on to what are the actual expectations expectations from the overall company. On a consolidated basis, the net interest income, that is the NII, is expected to come in at 7,130 odd crores, an uptick of almost 29% on year-on-year basis is what we're penciling in. PPOP, that is the pre-provisioning operating profit, is also expected to see an uptick of almost 30% on a year-on-year basis, standing at 5,850 odd crores, while the net profit is also expected to see an uptick of almost 28% year-on-year, standing at 3,550 odd crores. Largely, the expectations are that the margins could be under pressure, and that could be mainly on account of the rising cost of borrowings. In fact, in the first quarter as well, the management has highlighted that they expect the NIMs to contract by around 10 to 15 basis points on account of higher cost of borrowings. JNPAs for the first quarter were at the lowest level seen in the company's history, and they are expected to be more or less stable at the current levels. They're expecting stable credit costs as well, given the credit quality is expected to remain stable on a sequential basis. So there will also be a con call that will be held after the results, and we will definitely be keeping an eye out on the commentary around the fundraise that the company recently approved. Apart from that, it is also important to monitor the kind of commentary that comes in from the management as far as the AUM growth as well as customer addition is concerned. The commentary on the asset portfolio, given challenges in the unsecured portfolio especially, is also another factor that we will be keeping an eye out for. So all in all, a steady, strong quarter is what we're expecting from Bajaj Finance this time around.
Thank you, Vamakshi. A steady quarter expected from Bajaj Finance, but with a margin, some kind of margin pressure coming in. So keep your eyes fixed on Bajaj Finance today. But the Q2 earnings, now we can say that it's on full swing, full bloom, with a whole host of numbers trickling in. And Sharad is here with a roundup of 4 such companies' earnings. Over to you, Sharad.
Well, yes, in focus we are having earnings season, and Cyient DLM will be in focus, largely inline set of numbers, but the important thing is that top line has increased, and this is because of the contribution coming in for aerospace as well as the defense space. Now, the margins, that has been impacted, and this is due to the adverse product mix. Apart from this, also looking at Celan Exploration, it's a small cap company, but the results have been very strong. And do remember, this is for 2 reasons. There has been higher production numbers and also higher crude prices that has actually aided the numbers of the company. Also, ICICI Securities, this is the trend we had already caught up in ET now, that most of the broking companies have delivered a very strong operational update. And over here also, year-on-year basis, there has been a strong growth across all the operational parameters as well as the financial parameters. And 2 segments are there. One is the institutional broking and the retail broking. Both the incomes have come above the street estimates. Also, CEAT coming up with a very strong set of numbers on a sequential basis as well, and 2 reasons for it. The first one being a healthy sequential volume growth coming in because of a rising replacement demand, and also strong OEM demand coming in due to the festive season. And also the gross margins, if you look at it, that has also expanded on a sequential basis by roughly 230 basis points, coming in at 43%. And this is coming on the lower raw material cost, where tire companies get a lag effect, which we saw.
All right, Sharad, thanks so much for taking us through that. Let's also shift focus to some other news that we've been tracking for you. And the Supreme Court will deliver its verdict on petitions seeking legal recognition to same-sex marriages today. The 5-judge bench, led by Chief Justice D.Y. Chandrachud, has reserved its judgment after a 10-day hearing in May. Water levels of the Amazon's second-largest tributary, the Negro River, hit their lowest levels in 121 years. Severe drought in the region led to these conditions, and several riverine communities are impacted. The largest city and capital of the Amazonas is the worst affected from the drought. And Russian President Vladimir Putin arrives in China for his meet with Chinese Premier Xi Jinping. This is despite an arrest warrant issued against him by the International Criminal Court. Putin is also expected to attend the Belt and Road Forum being organized by China.
And with that, it's time to wrap up on this edition of Market Cafe. But stay put on the channel as we catch all the action on the market.